Come on in and settle down, everyone. Great to have your company for our next session. And it sounds like it's going to get a little bit fiery and feisty because, as Helen just pointed out, she's not moderating this panel, she's actually the mediator of it. We were going to get a UN rapporteur in to sort of sort this one out, but I'm sure Helen from MYOB will do a great job. Well, as I said, we are going to discuss SME attitudes and behaviours when it comes to managing finances. Of course, MYOB has a great insight on that and regularly puts out reports on it because I get them and read them, Helen. But we've got an excellent panel for this. We have Matthew Tyrrell from Kodat, Patrick Coughlin from Creditor Watch, and Matt Seck from Airwallex. Helen Lee from MYOB is your moderator and mediator. Ladies and gentlemen, please give them a big hand. Over to you guys.
Still good morning. Good morning. Yes, hello, I'm Helen Lee. I'm from the MYOB Executive, where we, of course, are focused on supporting small businesses across Australia and New Zealand and helping them to start, survive and succeed as a business management platform supporting a wide variety of their requirements. Been around quite a while, 31 years. I also have the privilege of serving as a non-executive director on the board of ASX-listed Button, where of course we're reinventing cash flows across business, working predominantly in a B2B context, servicing SMEs at the end of that chain. And joined today with a strong panel with, again, direct SME experience as well as via B2B connections. So I'll start with Matt Tyrrell. Matt is the commercial director at Kodat. Kodat describe themselves as the universal API, enabling access to consented business data from customers across multiple platforms, accounting, commerce and banking. Matt has a long-term career in the finance sector. He founded CurrencyView in 2015, automating cross-border accounts payable and FX hedging. They were acquired by World First in 2019, and Matt worked with them out of the UK before returning to Australia with Kodat. So welcome, Matt. Thank you for the time. Next to Matt is the other Matt. So that's Matt Tyrrell. This is Matt Seck. So I'm going to call them T and S, I think, for the rest of the morning. And Matt is the Director of Revenue and Product Strategy at Airwallex. So again, sporting the Airwallex t-shirt. They're all in uniform through the course of these 2 days. Airwallex provides global financial infrastructure and applications to empower businesses of all sizes to operate anywhere, to grow without borders. And Matt leads the strategy and analytics team in ANZ, focused on executing the global product roadmaps and the effective monetisation of those products. Before this, he was in the corporate strategy team at SEEK, with a background in management consulting and small business ownership himself, so brings some unique insights through that. Welcome, Matt. And last but not least, on my left is Patrick. Patrick is the CEO, Patrick Coughlin is the CEO and one of the founding employees at Creditor Watch. That's a commercial credit reporting bureau with over 50,000 customers, from sole traders right through to ASX-listed companies. Creditor Watch combines multi-source data to inform a view on credit risk for their customers. And prior to his more than 12 years with Creditor Watch, Patrick was with One Wi-Fi and Dynamic Business, giving him an understanding and an empathy for the SMB sector, which he also now applies as a member of the ASIC Business Advisory Panel. So welcome, Patrick. So some diverse experience for us to draw on in the discussion this morning. Now, as already mentioned, MYOB loves to research our SME customer base. We do that on a regular basis with very specific quarterly reporting. And interestingly, our June Business Monitor data showed an almost entirely balanced perspective amongst SMEs on their assumptions and their opinions of what's going to happen economically through the remainder of the year and into the next 12 months. 41% of them are anticipating improvement and 37% are anticipating a decline. So they're almost entirely split on sentiment, with a good chunk of them sitting on the fence in the middle. So I'll start with a question about that, because I think sentiment drives behaviour. It drives confidence or lack of confidence, which particularly for small businesses then, of course, informs the behaviour and the choices that they may make around investment. So perhaps for you, Matt S., we'll begin with a quick sense check on What are you hearing from customers? How would you interpret their sentiment? How's that showing up in the behaviours you're observing?
Great question. I guess, I mean, we're all pretty well aware on the current sort of macroeconomic sort of environment challenges that sort of poses with interest rate inflation sort of rising. But I think when we speak to SME customers, I think we get a huge sense of optimism in a way. And we ran a recent survey, for example, where I think we found that close to 69% of SME businesses are actually thinking about expanding their business overseas, right? And that's a massive sort of percentage. Obviously, only about, I think, 35% of them are doing it today, which means that the remaining 35% or so are thinking about making that step in the next couple of years. And that be sort of expanding to overseas customers or be to sort of expand the kind of employee base or offshore some parts of their operations. And I think that sort of speaks to tremendous sort of optimism in terms of sort of beyond the current sort of macroeconomic challenges. A lot of businesses are still thinking about how do I thrive and how do I sort of grow my business within this environment itself.
So there's hope. They're hopeful, and I think importantly, looking and exploring that top line opportunity as well then. Patrick, you have a very particular lens on that as well. You have deep insights into some of those dynamics.
Yeah, we get some really good insights from small businesses, and there's optimism there. They're very positive, and I think despite the obvious macroeconomic headwinds, a lot of media attention around those headwinds as well. Not to say it's misplaced, but the general feeling is rising interest rates, inflation, supply chain, and labour shortages. They can't be worse than full-blown lockdowns, on and off for 2 years. So there's a general sense that there's been investment in technology, efficiency gains, and becoming a lot more streamlined, removing friction from their businesses through those really hard 2.5 years, that they're now well positioned to deal with these new problems that they're facing.
So they are new problems, but in some way probably emotionally a little lighter, or they're more a cognitive business challenge to solve.
That's right. If you are operating a hospitality business, the fact that you can open your doors and have people come into your cafe or your restaurant is a huge win. Yeah. You're running a manufacturing or processing business, not having to worry about shutting down for 5 or 7 days or 14 days because one person was exposed to COVID. They can get on with actually running their businesses nowadays.
Yeah, there's a theme in there around certainty for small business.
Certainty is that key word.
Yeah, without a doubt. Matt, your engagement is typically more in a B2B context rather than direct into SMEs. But what have you seen in terms of those digital uptake patterns that Patrick's just referenced there over the past couple of years? And what does that, indicate for you?
Yeah, so I think we're seeing. You're right. Thanks. We're a B2B business. Our customers are typically banks and fintechs, and we sit as an integration layer between them and their SME customers. I guess what we're seeing, in the research we've seen is that these SMEs are relying much more heavily now on their software. They're sort of leaning into it. They're looking for cost savings. They're looking to streamline operations. In an environment where margins are eroding. The wider, I guess, skills shortage as well is really driving a focus for these SMEs to be automating processes as well. And for fintechs, that's an amazing opportunity in Australia.
So efficiency is a really key thematic?
Yeah, definitely.
Yeah. So our business monitor data, the MYOB business monitor data manages reviews particularly the key concerns, things that are on the minds of SMEs consistently over time. And with the exception of a really significant spike in fuel prices in the January report, that's settled down ever so slightly after the back of that shock, we tend to see this really consistent interplay that we see again at the moment, where it really cash flow is key. So cash is king, it always is, but cash flow is absolutely key. And so managing the increased cost pressures of fuel, utilities, supply chain variables alongside effective pricing and then thinking about how they're going to drive profitability is the absolute current juggling act. How much of that pricing can you pass on? How much of that do you have to absorb after the last couple of years that they've been facing? So let's perhaps talk a little more and dig into this whole question of costs, because, you know, if you're thinking about being efficient, there's some very significant behavioural choices or business tactical choices that SMEs have had to and continuing to make. So, Matt, where are you seeing the main focus in these areas of cost and expense management? How's that playing out?
Yeah, I think step one in that sort of cost management process is actually getting visibility on costs, right? And at least what we're seeing, because we offer some of these expense management solutions in market, is that we're seeing this trend of consolidating sort of banking providers and you know, corporate card providers, for example. So moving to get more transparency, more real-time visibility over business finances. So we're seeing, you know, SMEs stepping away from, say, out-of-pocket expenses from employees, which often sort of there's zero visibility on that. Employee could go on a business trip. They don't build a company for 2 months. You don't know how much has been kind of spent. To using sort of like products and services like ours, and there are a number of sort of other providers in the market as well, which provide these types of real-time sort of visibility, and that's step one on that. And then obviously step two is sort of consolidating sort of the number of tools and solutions you use. One, obviously, by consolidating that, you kind of cut costs on the tech side of things, but also more importantly, instead of having 3 separate sort of credit card statements, you're seeing it all in one place. And getting that is probably quite key, and we're seeing a lot of that step being kind of taken now by a lot of SMEs in Australia.
So that's interesting. So not just the visibility and the liveness, not a good English word, but the liveness of that data, the real-timeness of that data, I'm assuming then requires from them more active management of that day-to-day as well. So they're in the data more frequently.
Yeah, they're in data more frequently. They're sort of crafting policies and things around that. And also, I mean, beyond just managing sort of, I guess, cash, it really depends on the nature of the business that they're operating in. Obviously, in the service industry, for example, where businesses rely a lot on headcount and seeing that sort of churn in staff is increasingly sort of challenging. And so how do you sort of, how do SMEs sort of think about that balance between sort of wage growth and just pushing it out to attract and retain talent versus sort of matching that cost? I think that's quite an interesting challenge that we're seeing sort of SMEs being faced with.
Yep. We often worry that SME owners can spend more time in the business than on the business, and thinking about the dynamics of how to improve the business going forwards. This is definitely one of those moments where you're having to pay attention to what's happening. And so this consolidation theme is an interesting one. Where are there multiplication of subscriptions? Where are there multiplication of fees? Where are those little 1%ers that when you add them together can bring saving? Matt, you've also spoken to these efficiencies, these cost savings that SMEs are looking to drive or potentially using digital tools to facilitate. Is there anything you'd add?
I mean, we're an integrations company, so it's probably no surprise that we see integrations as being more and more of a focus and decision making for SMEs. ERP, accounting, payroll, expense management, point of sale payments. These are the core functions of SME business operations, and I think there's a stat out there that says the average Xero or MYOB user has about 12 different apps that sit, I don't know if it's 12, whatever it is, but that are sitting outside of their accounting platform or ERP system. So they increasingly want to see these all sort of working together. And I think, to be honest with you, I don't think a lot of business users and business owners are really spending that much time in the accounting platform. They're spending their time in, the expense management system of Airwallex or wherever it would be. And they just expect those things to be seamlessly talking to each other.
Yeah, there's a lot in there that really resonates for us, without a doubt. This thematic of disconnection, how you can ensure that the pieces of the puzzle work in a really efficient, integrated way is certainly something on our minds as we think about our customers and how we support them, without a doubt. But also that there are only so many core workflows in a business, and you want them working really, really smoothly. So pay attention to that. Yeah. And I suppose when it goes wrong, Patrick, you have a really good lens into seeing that, being able to give a predictive eye to when business is tracking well, where things are going wrong. What are the patterns that you're seeing?
Yeah, so we run a monthly business risk index, which gives us really good insights just into general risk within the economy, specifically around insolvency and probability of default, and how companies are paying their bills, how industries are paying their bills, even down to almost a suburb or a local government area visibility, which is really exciting. And I think, you know, what we're seeing is there's certainly, despite the optimism that I spoke about earlier, there's certainly a lot of negative data coming through around pressures on business and an increase in credit risk and, you know, slowing payment times as well. But I think we also have to remember that we're coming off this really, really upside down world where through COVID, despite the fact that, you know, companies should have been going into administration and insolvency more than ever, the numbers dropped 50%, and we're still making our way back to pre-COVID insolvency numbers, which we're very close to. But despite the fact that it's increasing, you know, it's back to almost the normal sort of cadence of insolvencies, which is good. I think there are obvious sector challenges like hospitality, construction's been spoken a lot in the media, and there's been some really high-profile collapses. But at the other end of the spectrum, there's some industries that are doing exceptionally well, like agriculture, health, for obvious reasons, and also manufacturing. You know, it wasn't that long ago that, you know, manufacturing was dead in Australia, and all of a sudden it's performing really nicely. So I think it's important. It's very easy to generalise and say, you know, insolvencies are going up. I think what's really important is to understand where they're going up, and that's both from a geo location perspective, but also from an industry perspective as well.
Certainly some of the macro variables have changed the dynamics. You know, as you said there, you know, local supply chain demand impacting on the strength of manufacturing and so on. I think you said when we were speaking last that construction was perhaps getting a slightly unfair rap in the media.
Yeah, look, I certainly do think they get a lot more attention than other industries, and construction's one of those industries that's always probably, you know, top 3 riskiest industries in Australia, because they operate on such low margins. You know, even the largest ones are operating on, you know, 1-2% margins, which is crazy. So when a $100 million or a $1 billion project goes wrong, it goes really wrong, and ultimately the construction company struggles to survive. And there's also this issue around, you know, fixed price contracts. Right. I do think that, you know, it is a really robust industry. It is really big as well, and that the whole economy, you know, anything linked to property in Australia, we know that the whole economy is, you know, reliant on that. So I think they will be okay, but they're certainly, you know, facing some really, really tough conditions at the moment. What we typically see is that despite that they're the slowest paying industry in our payment rating insights and data, that doesn't necessarily translate to them being the riskiest industry at the moment.
Very loath to digitise, challenging to get construction to digitise. 85,000 construction SMEs with no to very little digital capability. I was having a conversation recently with a politician about why, you know, simple things like invoicing capability or payments capability was something that someone who had just done the tiling in his bathroom could benefit from. And, you know, there's an assumption that being on the tools means that there's no opportunity to improve your business, and that's definitely rich. Patrick, just a question without notice for us to come back to at the end. Everybody in the room now wants to know the slowest or worst paying postcode in the country, so we will come back to that. Yeah. Matt, you also, I mean, you mentioned sectoral differences, but you definitely see sectoral differences in take-up and patterns. What stands out for you at the moment in terms of sentiment and, you know, behavioural patterns?
Yeah, I think we deal a lot with or one of our biggest sort of sectors is professional services. So, anyone from an accounting business all the way to, like a marketing agency to sort of consulting businesses. And what we're seeing in these businesses is that all of them are struggling with one thing, which is hiring and recruiting talent. And the obvious sort of pathway that a lot of these businesses are taking are increasing salaries. But we're seeing a lot of creativity in that, where more and more businesses are starting to think about sort of employer perks in the way that they offer it to their employees. So instead of just increasing someone's salary by, say $3,000, these businesses are thinking about how can I pass on a benefit of an equivalent value. Say, we'll pay for your gym membership, we'll pay for, mental health sort of like courses or subscriptions. And that does sort of two things to the employee, right? One is if you just blatantly give a $3,000 increase to an employee, I think employees just say, I've done well, this is what I deserve. But giving sort of a $600, sort of $1,000 sort of gym membership, I think reinforces, one, the employer's sort of focus on mental health and well-being. And then secondly, obviously, employees talk about these things, right? To their friends, to their families, like, hey, I'm going to gym for free. And a lot of these SMEs are looking for, obviously, offering these perks come with whole bunch of sort of implications, fringe benefit tax and all that. And they're looking for, one, sort of like, advisory support to implement these solutions. And secondly, more a tech-enabled way of doing it. Obviously, paying, for 50 employees, 100 employees, invoices is going to be complex. So looking for like providers like us to kind of issue kind of corporate cards and empower that. And so we're starting to see sort of the role of what we offer to businesses evolving over time. We're not just solving kind of traditional finance problems. We're now moving from solving a finance problem to solving almost like a HR talent and recruiting sort of problem within some of these organizations.
I think that's really interesting, and the challenge for SMEs often is how to build, an employee proposition, because they don't have the scale. They don't have the scale of big businesses to, bulk discount deals on propositions or so on. So that's a creative way for them to be thinking. And, full disclosure, obviously we partner with an organisation called Flair, which is also about how are you giving SMEs access to those benefits to help them differentiate. So I think there is certainly something in the SME mindset around how I'm really gluing employees to the organisation in a way that I perhaps haven't had to in the past with different employment dynamics. But it's all a form of investment. So we've spoken about costs and we've spoken about efficiency, but investment requires clarity, as we said at the beginning a little earlier. We saw at the beginning of the year in our health index that SMEs really entered the year strong balance sheets. People had held off spending, or they hadn't been able to spend in some instances. JobKeeper buoyed things up a little. And so they were sitting balance sheet rich, but capital was a lot easier to access 9 months ago than it is today, and some of those dynamics have certainly changed. So what are you seeing around investment and access to cash, access to lending?
Yeah, so I mean, there's no surprise that there's been this significant downturn in capital markets, particularly for technology businesses, and I think any technology business that's trying to raise at the moment or has to raise in the next 12 months would certainly be feeling a lot more nervous than they were even 3 or 4 months ago. So I think that's going to be a big challenge. And the other challenge is for underwriters and fintechs is now changing the way they actually underwrite those type of businesses as well and support them or fund them. So starting to really have to look at getting back to the fundamentals of risk underwriting, but also utilising as much data and insights, not just on that business, but for example, on the customers of that business. So that second layer of data. So you've got your customer and then your customer's debtors, that becomes even more important. And when you're doing that at scale comes, technology and the need to automate it as much as possible. So certainly plenty of challenges out there for businesses that don't have a clear path to profitability and are burning cash. And we've seen that obviously reported on, plenty of redundancies, unfortunately, in the mix.
Yeah. I think one of the things we spoke to last time as well was around just the clarity of my access to lending or cash? Like, give me an answer, even if it's a no, just let me know fast.
Yeah, that's right. The feedback we get is, if you're going to say no, don't say no in 6 weeks or 8 weeks. Say no in 3.5 minutes.
Yeah.
That's fine. I don't want to be burning cash for another 8 weeks waiting. And I think that's where the huge amount of opportunity is for organisations at Intersekt is, the big banks, that they're investing a lot in technology and automation and speed, but it's at the end of the day, it's not enough. Small business owners are crying out for quick decisions, and with the adoption of e-commerce over the last 2 years and how quickly that's been brought forward and the adoption of that, there's an expectation now that has to happen in other industries, and finance is certainly one of those.
Yep. Matt, do you have any perspectives on this one?
I mean, I think there's the digital lending, the fintech space that is, when you talk about access to capital for SMEs, I think there is still there's a lot of choice out there. We speak to a lot of banks, tier 2 banks, regional banks, and they're starting to really, they've seen the success of these fintechs, and they're starting to look into SME lending and commercial lending. There's a lot of platforms like Encino and loan origination, Sandstone technology that are enabling these banks, these smaller banks that traditionally have always been focused on mortgages, on retail mortgages, to move into this space. So I think in terms of just the actual choice, I think it's going to get wider and wider.
So the landscape is rich and full with opportunity, but just as a last question for each of you, how are SMEs even engaging with this audience of participants? What are their attitudes, and are they willing to step in and give this a crack when you think about their readiness?
I mean, from our perspective, what we're seeing in the US and the UK markets, we work with some of the largest fintechs in the world, the likes of Brex and Jeeves. I think probably the key trends that we're seeing is in expense management. There's, these are some of the fintechs with the largest valuations in the world, and they're in expense management. So no surprise that Airwallex is really focusing and doubling down on that. And there's also a lot of other sort of homegrown expense management businesses like DiviPay, Cape, Patron that are also focusing on this. I think probably one of the opportunities is in revenue-based lending. Some of our biggest customers, our highest growth customers, are in that revenue-based lending. They're looking at sales data, they're looking at different types of data, whether or not it's commerce and point of sale, to make sort of more decisions on live data. So that's where I think the opportunities are.
So you think that the trends of Europe and America will potentially flow here, and we'll have the SMEs starting to interact with this more?
I think so, yeah.
That's right. Matt, what are your thoughts?
Yeah, I think obviously a lot of fintechs are going hard after the SME segment. Very lucrative sort of segment, biggest sort of market potential. But I think when it comes to finances, I think it's obviously a very dry sort of topic in a lot of cases. SMEs approach banks for one of a few reasons, right? I need money. Or I need to solve a problem in my business, and I think the traditional sort of way of trying to pitch sort of solutions to SMEs just don't work, right? And we've tried, going to SMEs and say, hey, we can give you an expense management tool. They're like, yep, this is probably number 55 on my list of things to worry about. Number 1 is sort of cash flow. Number 2 is sort of how do I retain my employees? And so really having that deep insight into what are the top 3 challenges that these SMEs are facing, and where we're finding a lot of success is how do we kind of bring together a solution, whether it's ourselves or whether we bring together a group of partners to kind of help solve that pain point. Hey, you're bleeding staff. Here's how our solution can kind of help you with that. I think that creative sort of narrative is going to be what
relevance, right?
Yeah,
Real
yeah.
relevance.
How you get that cut through to some of these SMEs and encourage sort of folks here who are in that sort of SME sort of sector, who are targeting the SME sector, to sort of think about that sort of problem space.
Yeah,
a little
thanks.
bit more.
And you were saying at the right time, so relevant and timely there, Patrick. Your thoughts?
They're in the weeds, as you said. They're working in the business. So when can you hit them at the right time? And I think embedded finance becomes, more and more important. And you guys are at the sort of forefront of that.
Music to my ears. Absolutely. Okay, so just before we close, that postcode.
Yeah, so I'll give areas so that probably no surprise. The first one is Western Sydney. They really haven't recovered from those extensive lockdowns last year. And the second, or equally as bad, is the Gold Coast Coolangatta area. The domestic tourism isn't enough to sort of replace international tourism. Plus, there's huge cost challenges up there, commercial and consumer property prices and leases and whatnot. So really challenging times. But at the other end of the spectrum, the good ones, the wheat belt, ag sort of centres, regional centres are doing extremely well. And then for those playing sort of city versus city, Brisbane, Melbourne, Sydney, Adelaide, Perth in the worst order. So Brisbane being the struggling CBD.
Right.
Yep.
Okay, so
And
out
Perth being the
west is
best.
going well.
Not a surprise, I guess.
Yeah, well. All right. Well, thank you, gentlemen. It was super to hear those perspectives, and I really appreciate that I could moderate rather than mediate this discussion. Thank you.